For anyone holding XRP, I would argue this is going to be one of that video which you don't want to miss. There has been an update in how companies report crypto on their books, especially for the US side of things, the US GAAP. So this is FASB, the Financial Accounting Standards Board, giving that clarity. And this is issued 13 December 2023. Remember, they give 1 year. So the end of this year, companies will be reporting crypto in their books. Most of them would be buying. But what's the catch here? Initially, the talk was about crypto being considered as an intangible asset. But right now, the talk is about it considered as an asset, just like the financial assets, at fair value. That's a lot. If you didn't understand what that is and why I'm saying there is a catch about XRP, I'm going to break that down to you so that you know what's coming. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. If you go back to this without much delay to see what's happening, there are some key things. But again, did you smash the like button? No? Consider doing that. Fine. We're back here. The amendments here is about how you measure crypto in your books when you are reporting that for the tax purpose or any regulatory side. And this kind of gives the idea that the thought process of, looking at it as an intangible asset and doing the impairment, which was the old way of doing that, has been slowly changed. Now, these are financial assets, but it seems that XRP is not included in that. Don't panic. Don't panic. Let's read through that and understand what they say. These amendments do not apply to assets that the reporting entity has issued or created, or even if those entities have obtained the assets from an unrelated third party. And I'm like, this is literally focused on XRP, XLM, one or two assets in the big cap side, the large cap assets, right? So the entity, therefore, would be required to apply the traditional intangible asset model to such assets. Say, for example, Ripple, the company, is giving this to another third-party financial institution to do what? The payments. So it's being gifted there, unrelated third party, for payments. But now you cannot actually report that there as a financial asset. Rather, it should be as an intangible asset. So just like commodities, the gold, the silver, which you have in your portfolio, that's how it is going to be mentioned from here on. So one thing which is positive is companies are going to have this. So if you understand, this is a big milestone because you already have the ETF live. That's one. Then this, companies can actually hold on to crypto in their books for the tax purpose, especially in the US side of things. So that's the US GAAP, right? The general accounting standard. So that kind of gives you an idea of which direction most likely the IFRS territories will go. The Europe, the India, the Canada, other side who follow a different standards. They'll actually go on to that area, which is significant. So if you don't want to dive so deep into this, general understanding, it's going to be a lot of money coming into crypto market. And if you think they're going to wait for a year to do that, that's going to be the wrong observation, because when the prices are low, that's when institutional investors want to invest. Not when the Bitcoin price is at 80 or 90,000. Not when it is at the all-time highs. They don't want to do that. But along with all this, we have something else. That's the altcoin season. That's interesting. But the point is, a lot of people don't look at it on the monthly too. That's where I say, yes, on a daily, it's at 80. But when you go on the long-term view, where are we? We're still here. When you are at 75 is where you get to see some movements. Especially if you're a long-term guy, you're watching this. This is what works in the market. So the yearly is still at 24. It was at this end, the Bitcoin's here, but now it's slowly moving on to the other end. It's starting to fade the Bitcoin's here and come to the neutral territory and then go to the altcoins here. That happens pretty quickly. The move from the mid-range to the other side happens very quickly. You can see all this. The time which you spend at the bottom, that's painful. I agree. But the moment you start to break through this and go higher, that's very quick. Historically speaking, that's how things have gone. Now, the upside to the downside is where Bitcoin is taking money away from the altcoins. And this is where you want to be an altcoin investor, where altcoins are starting to get more and more liquidity. Now, if you're on the Bitcoin dominance, you're literally watching at this. And you're like, okay, fine. If that's to happen, on a short-term scenario, what would it actually look like? So on a short term, this is what you're looking at. Let's remove this. Just look at the trend line. As soon as you see a break below this trend formation, you're watching substantial move in altcoin. Or money is jumping into random alts, you're watching 30, 40, 50% move in different altcoins. Can XRP be one of them? Who knows? But here we are watching something. There are positive news and some people don't think about it, but a few does. So we have new XRP whales. When the price is low, a lot of people are using it to stay away and say that this doesn't work. But at the same time, very few understand the potential of this asset and they are buying more. So I've seen people talk about, I want to hold 100k XRP. By this time, in 3 years, they are above 500k XRP. Some of them are close now towards 1 million XRP, talking about, now I want to hit $1 million mark in XRP. I'm like, okay, what's your target? I'm just looking for $1. So they are consistently adding on XRP and they are long-term investors. So there are very few in the market who has that thought process. But yes, you're going to see the price being volatile. You will see a lot of these happening in front of us. While the market does all of this, when you are looking at the opportunities, you are looking through a lot of noise for sure. And that's why I try to break these down as much as possible with the charts, the follow-up, the opportunities, what the breakout would look like, what your targets would be after the breakout, right? All of those things here in the Patreon. And if you're interested in those, you can look at the Patreon. The link is given in the description in YouTube or in the bio on Twitter. Now, jumping back, if you're looking at the chart of XRP on a daily, this is what you see. And depending on who you ask, they will say, okay, I think the price is going to go down. Or they will actually say, okay, I strongly believe that this break to the downside is something what we have seen in the past, and that should create opportunities for those who understand what happened previously. So if the history is repeating in itself, that kind of gives us a lot of idea. Now, if you actually ask me, like, what are the odds of that, Isai? What do you think about that? Let me ask you this. What do you see? Now, reduce the noise. Say, we don't want to focus on noise. You want clarity. Go for that. Fine. This is it. You're watching one base here, the base formation, and there's no deviation from that. You're putting a vertical line. You come down. Yeah, this is that base on the RSI. Fine. Great. Now, where is the price right now? It dropped a lot lower. So this is that move. But on the RSI, it took a lot more seller's potential power to come back here. So that is showing you something different. Have any idea? No? Fine. Look at this. The price goes down, but the RSI does not. There is a change. If you doubt that, go back in time, look at each of these areas where the price goes down and the RSI does not. Whether that's here for this matter, or you go all the way back at these bottoms where, say, for example, the price drops, the RSI does not. What happens after that? Yeah, it's not a parabolic boom. No, I agree. But that marks your bottom. That marks your bottom. So if you are literally looking for a move like this, maybe the market is going to be surprising you. Maybe I'm 100% wrong. Fine. But what I'm trying to show you is what happened last time when all of these factors were well aligned in the market. The price is not following the RSI like this, where it was completely a pattern-based move. Here, you're getting the divergence. You're seeing a difference in the strength of sellers and the price movement. That gives you an idea where we are headed. Fine. You get that. Now, you slowly move on to a higher time frame structure. You're like, okay, fine, I do get the point on a daily. And this becomes even more interesting. So you have a bullish divergence on the daily. Now, there is a little bit more over here, which is on a 3-day chart, a higher time horizon, where your price is higher, but the RSI is lower. What is that showing you? I mean, these are actually interesting facts you need to keep in your mind. One is showing you this, the bullish divergence, which is on a daily. The other one is showing you a hidden bullish divergence, which is on a higher time horizon, which is a 3-day chart here. So I'm like, okay, there is something happening in the background. We are watching the bullish strength building up. Who is buying, right? This was that question. And right now in the market, it kind of gives you a bold clarity saying whether we like it or not, there are few who know that this asset has a long-term value and we are doubling down on it. Whether it's going to be another ETF, I don't know. Who's going to buy? Who's the new buyer? I don't know. But I've seen few people who are buying. Now, that's not whale quantity like, hundreds of millions. No, it's like 10,000, 50,000 each time they're buying for sure. But the attitude is the same. It's bullish about the same asset. So you're watching few people having same thought process about the same asset and the regulations now matching up. For institutional buyers, this is going to be something they want to look at. If they are like, no, I don't want to put crypto in my asset at fair value, if that's the thought process, because there is huge volatility, because you'll have to put the fair value of that year. That's hard. Whereas if you're like, no, I'm going to use it as an intangible asset and put the impairment like gold, silver, that works a little bit better. That is where you're going to see some institutions saying, I'm fine with volatility. Some of them saying, no, I'm not. They'll have to choose the other assets and they wouldn't go for a micro cap asset. All of them need a high liquidity, large cap asset with fundamentals. And at that area, you don't have too much room. And that's where XRP, XLM, these assets comes in. And I strongly believe institutions are going to use that. They don't miss all this stuff. Now, another thought process, you can actually go on to the daily chart of Bitcoin and look at this and ask the general question like, what do you really see here? Because when you're on a weekly, you do see this clearly. Say, for example, you're going into the Bitcoin chart. You're looking at that on a 3-day or a weekly, depending upon which you allow. Here on a higher time frame, you're literally watching this saying, okay, this has been that candle, the mother candle to be named it in that way. It shows you one candle move from this range to this point. Great. Since then, you are literally watching all these other candles playing in and around. That's 50 days. 50 days of volatility to come back down to test that move. For me, that means sellers tried a hell lot more from this point to this point, trying to push the price lower. So you get to see this clearly. This bottom to this area where we are, sellers increased massively, but the price did not come here. That's huge. Now, if you actually take everything together and boil it down to the simple conclusion, those who are panicking right now will regret in few weeks to few months time. Because the general trend is this, it has not changed. If you are following any type of TA, you know this. Now, this is textbook pattern. You don't get things this easy in the real market. It is going to be like this. Then it consolidates there and then it goes up, right? So there is a lot of different manipulations which sure will happen because we have a lot of institutions involved in that. They don't want you and me making money easily. That's why I say, if you think this stuff is so easy, it is not. If someone is saying that to you, like this is easy stuff, just look at this, it's going to work. Either they don't know what they're talking about or they're lying. The problem is when you talk reality, not a lot of people like that. Because truth is usually like this, it's strange. So if you go on, if you're a good reader or a listener, go check up the book of Howard Marks, The Most Important Thing. I would say that's one of the biggest knowledge which you need in the market or mastering the market cycle. It can be anyone. But the priority should be knowing what works in the market and what does not. That's where that book, The Most Important Thing, comes in picture. And when you take your move through that, you're like, fine, I do understand what's happening in the market. I can balance myself. I've been aggressive here. Now I'm defensively aggressive. I'm not defensive. This is where you go defensive. If it's me, I would go defensive at that point for sure. But I don't have the market signaling me that I should go defensive. We'll say the same until that's there in the price action. If you're like, this guy is repeating something, it's boring, I understand. But there is no other choice. You'll have to follow the price action on a daily basis to weekly basis to monthly basis. Because if you get to see this formation, okay, get out. Run for your life. Otherwise, you are still riding the market, listening to a lot of different stuff, trying to make the best judgment. And that's again where the SI family comes in with all these breakdown. All of this. Just one example I'm showing you guys to understand what's happening. The level at which we break things down so that people understand what's happening, the divergence, the price structure, the trend, the wave structure, everything is going to help you massively. And that's one of the reasons why we have 980 plus members in the SI family and growing, taking benefit of this educational opportunity while the market is showing you huge opportunity zone. So when the market actually does this, there is not a lot of people who ask the question like, how can I use this opportunity? Yes, it's just starting on the macro. It started on the medium term. It's nearing that range of boom on the micro term. So you will watch a lot of small to medium cap assets popping soon in the market. You will watch a lot of large cap assets starting to burst soon. So here, IOTA, it's bouncing back up. Now, not lying, we bought IOTA's dip. We doubled down, and as soon as I was adding on to my positions, I was dropping it, the screenshots in Telegram. The amount at which I'm buying, multiple, and the price which my order was going through. So in Telegram, the alerts were really useful. We bought some more assets and literally we are watching them bouncing back, including Optimism. There are different assets which I doubled down on. We have a lot of trades. Few where I was really confident enough, I went and doubled down on those. The thought process here is as soon as that capital shift happens, you're going to see a lot of different assets running. And there will always be people who try to catch that green candle and end up in red. But that's where you make money. You buy at the bottom, you wait, the price slowly grinds up. At one point, it takes off and people are like, nah, I want to catch that. They'll jump on trying to get that opportunity. And you make the most because they push the price up. At some point, remember, it's not going to be easily calculatable. The move will be like nuts. This. You see that? That's a weekly chart. And you're watching the price moving from 200 all the way up to 600. 605. In some exchange, 607. Around 600 plus, say 602 or 3, I dropped the chart saying, guys, if you're in there, take your profits, run for your life. Now it's at 103. Again, some people say divergence doesn't work. It doesn't happen every time. Watch this. The price went up RSI did not. So it's not nonsense. It works. For some reason, it works. Now, I'm not smarter than the market, but I see this each and every time. So I'm like, why the hell should I go against it if that's the case when I'm back testing on hundreds of charts, on hundreds of assets? 95 assets show me this. That's way better than most of the big investors. Look at the average of Warren Buffett. That's around 58%. If he's taking 10 trades, his win rate is 5.8. Yeah, it's true. We took like 23 trades and only 2 got liquidated. We had 350% up even at this time, and we went up to 700%. That's luck and timing. That's it. The average of long-term consistent investor is 60%. Now, if you use these, you are trying to get close to those guys because you believe that the market shows you what you want to know. Now, use this. A lot of assets are going to do this. Right now, imagine you are in this phase where the price is dropping like nuts. It's crazy. You can't understand what's happening. And you're like, nah, it's done. The price is going lower. But at one point, it comes back up and it creates a new high and it pops like crazy. Believe me, when prices go like this, at some point you have to take profits and step back. For me, I was by 250, 240. I was like, guys, take profits, get out. This is now utterly nonsense. Because it was on a 3-day chart where we were watching like it's trending down. Here, it's trending up. That's now at an uncalculatable area. And that pops. Boom. I just saw like a couple of guys with still day because they forgot about that asset and they saw my get out cautious signal and they took profit. They're lucky. But most of them who bought it here around $15 when the primary buy call, the opportunity call for TRB came in and rode it till here, I'm like, you guys are the greatest, the perfect movers. You got 10, 15, 20, 30, 40x. That's a huge market move. Now, is it just one asset doing that? No. There is a lot of different assets right now showing you it's here. It's about to pop in this next leg up. That's why I'm giving this saying, watch the SI family. There are going to be few millionaires. The way I see, now not all of them will be, because some of them don't have the emotional ability. They are new in the market. They are learning. Some of them are fast learners. I see the learning curve is so small. They put in a lot of time, effort, boom, great, perfect. But not all of them are equal. So some will make it big. Investments, yeah, it's going to do 5, 10, 15, 20x, that's for sure. But some of them are going to make it the big out of this. Why? Because they'll follow this with discipline. Having discipline is going to change your life in this market cycle. So guys, if you received value, smash that like button for me if you haven't done that already. And if you want these updates and go for a one-on-one session with me based on your portfolio, breaking it down, thinking about, okay, can I make something? Can I get this bull run? Fine. We'll go through that. We'll discuss through what you have in your portfolio. Which segments are you covering? Is it just payments? Is it just smart contracts? What opportunities do you have? Is it just the large cap? Is it just the medium or the small cap? How can you better align your portfolio? If that's the thought process which you have, I would say this is going to help you massively in this wave cycle. I'll meet you guys on the next video, guys. Bye.